Hey, Amber.
Hi, Jeremiah. How are you?
I'm doing well. Again, thank you for taking the time to talk to us today.
Absolutely.
I'm Jeremiah Zortman for you out there, Realtor with Anderson Realty, and today I'm talking with Amber Garofalo with Cross Country Mortgage. And Amber, you've been in the business for 20 years now. You've helped
Yeah.
200 plus people this year close deals on their homes. You're growing, you're moving into a new office space. And more importantly, or at least today, we're talking about first-time home buyers and what are those first steps? What are those things that our first-time home buyers need to take when dealing with a lender?
Mhm.
You worked with 86. Is that number correct? 86 home buyers this year.
86 first-time home buyers this past year, and we're hoping to get to 100 in 2022.
That's very, very, very cool. Well, I've worked with you a number of times. You're one of my favorite companies to work with. Your service is sensational. I'm going to say that multiple times throughout this video because I'm always so impressed with how you guys deal with my clients. But I've been working with a number of first-time home buyers over the past couple of years, and when I first engage with somebody, there's often some anxiety about making that first call to a lender. Sometimes there's an anxiety about what they might hear, and they sometimes rule themselves out. And I'm always encouraging them to meet with someone like yourself. First of all, you're lovely, like you're very nice.
Thanks.
You haven't hurt anybody's feelings yet.
No, we try and help people, not scare them or anything. So I think that's a good suggestion is, yeah, starting with somebody that your realtor recommends because they know who's going to help take care of you at a really high level.
Exactly. So when I go to a client and I say, reach out to these lenders, what does that first contact look like? Should I email you? Should I call you? What is the actual like logistics of getting a hold of you?
Yeah, I mean, we get pings on our social media, we get texts, emails, calls, whatever works for us to initially connect. I personally like to, if it's your first time doing this, have a 15-minute phone conversation with you on the front end of us doing anything, just so that you can ask any questions that you might have. We can address any fears or concerns that you might have about entering the process, and then talk about what the goals look like for the purchase, because what you envision is important to what we structure and what products are going to help make that vision become possible for you.
Well, that sounds very easy. But to that point, can you expand a little bit more on like what is the obligation? Like
Oh, yeah.
what does it cost to like engage with you in the early stages? What am I obligated to anything if I call you? What does that look like?
No, actually, in a way, I advertise like schedule a 15-minute call with me for anything. Like if you have a budgeting question, if you have a credit question, if I have time on my calendar every single day for clients just to have that time for me with me. So, and that's free for you on the front end. Now, the goal is that we would be able to help you in the long run and help you be your mortgage lender and help, give you that confidence in working with us.
Yeah, as a realtor, as with lenders, at least with Anderson Realty and myself, we don't charge any fees up front either for buyers. There's nothing paid out until and if there is a sale that closes.
Correct. Same thing with the lender side too. Now, some mortgage companies may charge an application fee, so that would be something that you would want to ask. We do not. Some companies will make you pay for the appraisal before they will order it for your purchase. We do not. So we do not charge anything truly before closing. But in general, most fees are paid at closing for your lender. Nothing on the front end.
Thank you. Great. So I've been asked, like my realtors told me to get a pre-approval letter. What does that mean as well? Am I locked into something at that point also?
Right. So you can actually get pre-approved with multiple lenders. And so if you don't know anybody or you're just getting suggestions, it might be a good idea to talk with a few. You can have multiple pull your credit, and it's not going to harm your credit as long as you're doing it like around the same time. within, I think it's the CFPB says 45 days. I always say 30 to consumers just because I'm like, I don't know. It should only impact your score one time to talk to multiple different lenders, have them pull your credit, everything. So it was just doing that all in front end if you would like to. And then there is no obligation to work with us, even if we are able to pre-approve you. It just simply means we're eligible to give you products that we're defining within that pre-approval letter. But I would say by the time you hit the streets with your realtor, you probably want to have the lender piece decided so that you have somebody that you can call, one person, and go, what is the payment on this house? What is the cash to close? When is the soonest we can close? How can we tighten up these contingencies? Can you call the listing agent with your great reputation and help us get this offer accepted? So I mean, there's a benefit to having a team in place before you really get out and you're in their home search stage.
Yeah, I'm always telling my clients that we're assembling your Avengers, right? And someone like Amber is going to be your Captain America for sure. I maybe
we try.
But I think that's really important, especially the point about the credit being damaged by getting a pre-approval. That is overstated and overblown and shouldn't dissuade anybody from reaching out. Yes, in this market, do you need to have your lender on board before you go shopping? 100%. Not always the case, hasn't always been the case, but in this particular market, it takes about 7 seconds to fall in love with a house. And if a buyer gets hung up on then trying to get pre-approved or then get the lending, the house might be gone before you're able to actually commit an offer.
Right, so, exactly. So that's a valid point. And so, having having your lender already and on the wings, waiting in the wings and fully teed up and ready to go is super powerful when it's the perfect home for you. If you're just trying to call and, the first lender that answers pre-approves you, they could be with a company that, doesn't have a great reputation in the Twin Cities market. The lender may not be explaining everything to you the way that I would. It could cost you hundreds of dollars more per month, thousands of dollars more at the closing table to just do it that way. So it's super important financially and, just, I don't know, like just to prepare yourself the best to do this piece and kind of have it defined before you get out too far in the search process.
Let's say I'm a first-time home buyer, but I've got some credit oopsies in my background. I've made some mistakes. Who hasn't on some degree? I personally, in my background, I definitely had to take some time to recover from some bad credit, which I did over time with some very simple stratagems. What kind of credit, like, can you share what kind of credit I do need in order to qualify for a loan? Like, how does it have to be 800? Like, tell me more about that.
Yeah, so me too. I've had some mistakes I've made along the way with credit, and let's face it, not all of us are, modeled what to do and how to utilize credit and budget and things like that appropriately either. So, getting the money right is important first. We don't want to be lending to you if you're in the middle of a crisis. The lenders kind of want to see you're coming out of the crisis at least a little bit. The credit score doesn't have to be as strong as a lot of people think for you to get qualified for a home purchase. We can actually do loans with as little as 3.5% down with credit scores 580 and above. Now, if you're below 580, you just need a little bit more money down, but there's still options. So, we have to see that you're not in the middle of the bankruptcy, in the middle of the late, in the middle of the job loss, that you're coming out of it, that there's been some sort of recovery. And we're happy to work with consumers early to help them get best prepared, i.e. like for the fall, so that they're in that best possible shape at that point with their credit too, and telling them what to do. But yeah, so there's great options really with low down payment options, a lot more gracious with the credit score than people assume.
Well, that's relief. That's thank you. Okay, so that's the credit part. What about like my income? Like, I'm not making 6 figures, Amber. I'm a
Well,
first time home
and
buyer.
you don't have to. I mean, I have employees that are literally first time home buyers and, in their early 20s and doing this. So you do not have to be making a ton of money. I bought my first home in college, and I was working full time in college. And so it wasn't a big salary, I promise you then. And I had roommates and stuff like that. So there's a lot of ways that we can get creative to become, to make it work for people. The younger you start with home ownership, really the better you're going to end up later in life. So I love helping young people get into the mix. But I would say with your income, you want to make sure it's stable, consistent, and likely to continue. And that's what the lender's looking at too. We don't want your income to be, part-time, seasonal, things that are going to have a defined end. But if you've got a great job salary, you get bonuses sometimes too, whatever, and you feel pretty good about that and can put a budget together, you more than likely can qualify for a home. It's just a capacity issue. The higher the income, the higher you can go typically with the purchase. So.
And I want to add and interject here, remind people that after married couples, the largest demographic of home buyers is single females. I think that people don't realize that. So if you are a single female in particular, like they're doing it.
Yeah.
The sisters be doing it for themselves as.
Yeah, well, or single guys too. I mean, really, if you're young and you're like, oh, I don't really want to buy a place because I might meet somebody or whatever. I was in that same predicament. I had owned 2 houses and then wasn't like married or anything. And so I was kind of waiting around living with friends. And like, this is, kind of bogus. I have good money. I make good money. My credit's really good. Like my accountant basically said, you have to buy a house. But I bought a house that I could easily rent if my life changed. And right now, like you can actually own versus renting a lot cheaper being an owner in a lot of cases. So, given that, if it's something that you could rent out very easily, if your life changed and you couldn't sell it or you didn't want to sell it, then it's a very safe investment for you to do. And I would say, don't wait to get into homeownership because of that.
Yeah, if you've got some crummy roommates or crummy landlord, don't assume that because you're a single person that you can't afford a home.
Well, and rents are going up by like 6% everywhere, pretty much.
Yeah, let's jump to that. I'm a renter. What's the value of buying? So, I mean, obviously, yeah, rents are going up at a rapid rate. And I mean, we still run into a lot of people, it feels like in the Midwest, even where, they have that like relationship kind of rental situation where maybe that isn't as impactful, but the rents in general are going up by about 6% per year on a national average. In most places in the Twin Cities, that's about true. In some areas, it's closer to 4%. But if you think about that and you're able to lock into a 30-year fixed rate for 1% or 2 or 3 lower than that, it's not going to change your payment every single year. Just to give you some numbers, on a $300,000 purchase, if a person put down the minimal down payment of 3%, it'd be $9,000 for them to invest. Okay. And the difference in what they pay in rent versus owning is like $200 difference lower to be an owner based on kind of the statistics for the area. And then over the course of time, obviously that rent continues to go up. So the spread widens, and it's about $28,000 difference in a 5-year period at that level in Ramsey County right now for a young person. So, invest $9,000 to save 20 whatever thousand, and have that in your own pocket. Basically, that's where I think young people really need to understand that even though it can be a challenge to get into, it might take you a couple of times, it might take a little working on your credit. It's still a very worthwhile thing to pursue to become a homeowner. Thank you. And we just looked at those numbers just before we started talking today. So that is up to date information. And $28,000 over 5 years is not nothing.
And that's just in the difference that you pay out of your own pocketbook. It's $26,590. That doesn't include the appreciation of the house, which you get, and then paying down your loan balance every single month. That's like $30,000 over a 5-year period too, that you're paying towards your own pocketbook versus your landlord's.
And what is included in a loan payment typically? Like when we're figuring these numbers, what are we including?
Yep, so principal and interest is your repayment of what you're borrowing from the lender, the loan. And then you're gonna more than likely escrow for property taxes. The lender takes whatever the tax bill is for the property, divides by 12 and tax that onto the monthly payment. Same thing with homeowners insurance. You have to have homeowners insurance in case a storm comes through, damages your property, you have a burglary, anything like that that happens where, you know, all of a sudden the collateral might be damaged, we need to repair it. Homeowners insurance is there for that reason. We take that bill divided by 12, tack that onto the monthly payment. So we ask for principal, interest, taxes, and insurance, and then mortgage insurance if you're putting less than 20% down. So mortgage insurance is kind of confusing for clients, but it protects us, the lender. When you put less than 20% down, you're required to have it. It's an insurance against default, essentially. The better your credit score is, the cheaper the mortgage insurance is. The more money you put down, the cheaper the mortgage insurance is.
The more money you put down, the cheaper the mortgage insurance.
Yeah.
Important.
But I mean, I've been doing this for 20 years, as you mentioned, and
yeah,
the levels of mortgage insurance, like the rates are the lowest that I've seen them in my career. It's because delinquencies are very low for mortgage delinquencies. So that's good.
Right. Any sense, I mean, right now, if there's any reason to buy right now, it's that home prices are only going up and mortgage rates are still like pretty dang low.
They're really good still. I mean, they have gone up from our lowest low, but in the historical times speaking, like this is amazing, and it's a really good opportunity. And if it's only going to be more in cost and more in rate, which will cost you more each month, later you shouldn't avoid starting consideration of being a homeowner versus a renter. As long as you feel good about your job and you know where you want to live, you should probably be a homeowner. And you're over 18, I guess.
Yeah, great. So you make sure you can sign documents. Before we wrap up, one thing is let's talk about cross-country mortgage specifically. I love working with you guys. Just give you all out in America a sense of how a realtor and a lender work together. Sometimes it depends on the realtor, depends on the lender. The best lenders are like Amber, will like talk to a client of mine and then they'll call me and we have an exchange where they fill me in on all the gritty details of what's happening. So by the time we meet and get together, I'm already clued in onto what the financials are. That's just like one piece of the customer service that I appreciate from companies like Cross Country Mortgage. But Amber, I'm a first-time home buyer, or maybe I haven't bought a home in like 7 years, and the market's just very different. But I've been with big bank X for I've had a free checking account at some bank for decades now. Why? Tell me about working with a small independent lender like yourself that maybe my realtor recommends, but I haven't necessarily heard of. Like, tell me, give me your pitch. What can you tell me?
Yeah, for sure. So I've been around a long time, and I've worked for local small banks. I've worked for credit unions. I've been in management at those kind of institutions, and I've worked for independent companies like Cross Country Mortgage and a few others. And really, the independent companies are where a lot of the more seasoned LOs you'll find will go to the independent companies. And I like to say, even if I ruined every relationship that I had in the Twin Cities market with realtors, Wells Fargo would still hire me. I should throw anybody under the bus. Sorry. A big institution would still hire me, and they would still, you know what I mean? So you sometimes just get a different quality of a person, I guess, maybe coming from them. Not always. You get some really great people at those institutions too. So I don't want to say that there's not great people at banks, because there are great people at banks. But you'll just find that more people that have been in the business, do a lot of business, work with a lot of realtors, you'll see them at independent companies because They have a lot more variety of product for the clients. So that matters when we're trying to help you figure out if you have to cover your own closing costs and your down payment, and, how do we do that? There's products that we have that will help with that. Versus some of the institutions, they just have their one trick pony and that's it. The other thing is we saw, like times during COVID or like volatility in the market, banks will shoot their rates all over the place. And so you could be, as a consumer, just kind of stuck with that if it is during one of those cycles for them. Versus us, we work with about 50 different institutions that we sell to on a regular basis. So if Chase doesn't give us a great rate today, we'll just go to the next one, you know what I mean? And so on, so that we're able to give the best deals for our clients too.
That's fantastic. Well,
but yeah, cross country mortgage too is like, there's 2,900, I think, other loan officers like myself. I have 7 employees that work for me. So it's a big company, just newer name for sure. And in the mortgage world, companies buy each other all the time and merge. And so there are sometimes a lot of newer names, but the realtors, the ones that you're working with and you trust, they know who's good out there, who's closing the deals. And when the clients are happy afterwards versus, having to spend thousands of dollars to rearrange all their moving things and things like that. But
yeah, right. And you ask any realtor, they've worked with some lenders that perhaps were more difficult. The wrong lender can be costly.
It can be, and the company is not just the company either. I would say you could talk to 3 different people at Cross Country Mortgage and probably have 3 different opinions of Cross Country Mortgage. You know what I mean? So I would say, get referrals from your realtor or friends, family that have had really great experience too. We have some clients that, like every single friend they've sent us because they know we're going to take really great care of them. They've seen some other friends have a really bad experience. So.
I'm sold. I'm convinced.
No, but and truly, like, I want to help people with this. I'm very passionate about it. So finding somebody who is passionate to help you, I think is really, really important.
Real important. And there is that thing of like, if any reason to call a lender, there's also like a vibe. Like it is a personal, there's a personal relationship there to a degree. You do want to work with somebody who's, speaks in the same cadence, who has, to whom you can really want to have that sense of trust. You guys have always been extremely cordial and
I think it's trust and comfortability, right? Because you want to be able to ask the questions that you need to make the best decisions for you and your family. So if you don't feel comfortable, like that's going to, maybe not be to your advantage. So.
This has certainly gone a little bit longer than I thought, but Amber, you and I could do this all day.
Yeah, exactly.
And in fact, what I think we're talking about, I think we're going to put together a first-time home buyers class where we can set aside a full hour to go over all of this with anybody who might be interested. We're looking at doing that on January 13th. Stay tuned to the Instagram for more details on that. Anything else you wanted to touch on, Amber?
Yeah, I would just say, if you're interested to learn more, like doing that class on the 13th with us, so just be another Zoom thing like this. So it's low pressure, like just come and get some great information. Just for attending, we'll give you a free appraisal when you work with us later down the line, whether that's this year, next year, whatever, as long as you just remind me of that. We will of course honor that. So, don't think that this market is impossible too. A lot of people are talking about how hard it is. When you have good people behind you, it can be remarkably a lot easier than you thought. So don't be intimidated. We're here to help.
Yeah, we're here to get done, and we get it done. Thanks again. Thank you again, Amber Garofalo. Oh, how can people reach out to you? What's the best?
So our office line, you can call, text is 651-300-9411. We're on Instagram at @the_Amber_G_team. and all the other channels as well. So, but yeah, you could connect with us online, text or call our office, 651-300-9411 to get time scheduled with me and or get the process started. And yeah, we're excited to be partnered with great companies like Anderson and Jeremiah. Jeremiah is an awesome realtor. He takes really great care of his clients in this process. He helps a lot of first-time home buyers. So you guys should.
And I'm a real pest.
Yeah.
Every week I'm calling. How everything's going. Like, it's Jeremiah. They're fine. Great. Thanks again, Amber, for taking time. I really appreciate it.
Absolutely. Thank you.
And anybody wants to reach out, again, I'm Jeremiah Zortman with Anderson Realty. You can find me on Instagram at Z_ as in zebra. That's Z as in zebra. Thank you for taking the time, and perhaps we will see you on the 13th of January.
Thanks so much.
Bye.